Have faith in your mind, faith in your grind. Invest in yourself, transform in your time. Have faith in your mind, faith in your grind. Invest in yourself, transform in your time. When you trade and get paid, trade and get paid, trade and get paid, trade and get paid, trade and get paid.
All right, so now let's close this out by talking about how much money you really make in Forex and really how do you make money in Forex? Well, I want you to think of it this way. In a normal or a standard savings account where you put money in the bank, you're at like a national average of like 0.00000, no, I'm just playing, it's not really that bad, but it's like 0.0003% on your money. So you're literally getting like a $3 payment, from your bank. You look into your savings account and it's up by like $3 and you're excited. No, you're not really that excited. You don't even pay attention to that because it's so small. Even in higher percentage things like annuities, maybe you have like 10 or 12 or even 13% annually on your money, which, you know what? That's pretty good if for something that you don't have to look at or even think about. Real estate investments, maybe you can make, 30% on your money. That's really, really good. But in Forex, I want you to think about this. If you're taking, like I told you, a 1% risk, 1% risk to a 1 to 2 risk to reward, that means that on the basis of what we've been saying on a $1,000 account, $1,000, 1% equals $10. So that means if I'm risking $10, my reward is $20. Now here's the awesome thing about Forex. I can tell you why risk management is so important. Because think about this. I can show you, don't let the other people fool you, strategy is not as important as risk management. You can have an 80% win percentage on your strategy, 90%. You can have 95%. You can have 99% win percentage, which you don't. But you can have a 99% win percentage on your strategy. And here's what's going to happen if you don't know risk management. You're going to take 99 wins at, let's just say, 1%. So you're up really, really good in your account. You're feeling really froggy right now. You're feeling really good. And, as this price fluctuates, if you take one trade at a 10% risk, well, guess what? You just lost 1/10 of your profits in one trade. That's crazy. Now, you're still up in that case, but nobody has a 99% win percentage, and you're only up 80% in your account. That doesn't make sense. Now, here's what's more realistic. Somebody gets into a trade, and they're using good risk management at first, so they're using a 1% risk. So they win, and they're up a little bit of money. Next one, they win again, right? Maybe they win again. You're on a hot streak. You win again. So you're feeling really good. This new strategy really works. But what you haven't done is tested it through all cycles. So now suddenly you're feeling really froggy. You're feeling really good. And you say, you know what? I'm going to turn this lot size up because I can make money faster. So now you risk 5%. And what happens? That happens to be the loss. So all the money you just gained, you just gave back, right? Everything you just made, you just handed it right back to the broker. That's not smart. That's not how we invest properly. So what I want to encourage you to do is to take even a 50% strategy. You're not even a good trader. I ain't trying to offend you, but if you're winning one and losing one, you're really not that great yet. Let's just be real about it. But watch this. Let's say you win one, you lose one. You win one, you lose one. You win one, you lose one. Let's say that's your week of trading, okay? So you went and you traded for the week, and all you did was 50%. For every win, you have a loss. You're not even that great of a trader yet. You're trading a 50-50 strategy at best. So in my case, you win one. So you're up, right? You're up 2%, which in this case would be $20. So now your account is at 1,020. Next one you lost, but remember, we use a 1 to 2 risk reward. So you lost $10. Now your account is at $1,010. You win another one. Now you're at 1,030. You lose another one. Now you're at 1,020. You win another one. Is it getting redundant yet? You're at 1,040, and you close out your week with another loss. Now you're back down to 1,030. And on a 50% week, on a week where you did not do very well, you gained 3% on your account. Your stock investments are not gaining 3% a week in most cases. Your savings accounts, annuities, mutual funds, 401ks, or any other thing you have out there is not giving you 3% a week. But a bad trading strategy in Forex can give you 3%. Why? Because it ain't about the strategy. It's about risk management. And that's how we make money in Forex. It's understanding how to leverage money in your favor. It's not going out and having a win percentage strategy that just never loses, because that doesn't exist. You're going to take losses in Forex. But if you can minimize your losses and maximize your gains, guess what? You are in favor and you can gain. Now, what would happen if you took a $1,000 account and you compounded it by 3% weekly after a year times 52 weeks? Think about that. That's 160 or so % on your account, not including the compound. Because remember, 1% of 1,100 is $1.10, not $1, right? Or $10, $11, not $10. 1% of 1,050, right? You understand the compounding effect? So what I'm saying here is every time you do this the right way, you're putting yourself in a position to make a lot of money. And you can compound your account by hundreds of % annually, dozens of % monthly by simply using good risk management. No other investment out there is giving you this kind of return. But the reason most people aren't seeing it is because they're not using a strategy, a risk management strategy that really makes sense. They're over leveraged. They're hit or miss on their percentages. They're using flat lots. They're using flat lot sizes. That's not how we win. You have to get the money in your favor. I would never look and risk $100 of my money to hope to get $100 back. That wouldn't make sense, would it? Why would I risk 100 to get 100? That doesn't even, but if I would risk 100 to get 200, now that makes more sense, doesn't it? When you're at a 1 to 2 risk reward at minimum, some of these trades we take end up, we call them runners in Forex, which is another video for another time, but we call them runners. Some of these trades, I've had trades that were 1 to 25 risk reward, where I'm risking 100 and I make 2,500. And the whole time I get to take my profit with me, securing the bag along the way. Now that doesn't happen every single day, but I can tell you this, if you do it right and if you pay attention and you use good risk management, you can definitely leverage the broker in your favor. So that's how we leverage risk management in our favor to get the money working for us instead of against us. And now the next thing is the strategy, right? And you've been hearing me kind of like bash strategy and downplay how important strategy is. Strategy is important. We need to have a winning strategy. Because imagine if you do have a winning strategy where instead of winning one and losing one, let's say you were winning 3 for every one you were losing. That percentage goes up exponentially and you make a lot of money as that percentage increases. But it's more important to understand risk management. If you're going to have a winning trade strategy, there's 5 real things that need to happen if you're going to be a successful Forex trader. Number 1 is your mindset. Okay? Number 2 is your risk management. Forgive my beautiful writing here. Number 3 is your trade plan. Number 4 is your journaling. And number 5 is your strategy. Notice how strategy is at the bottom. You need to have the proper mindset if you're going to win. You need to have good risk management, which is what we've been talking about. You need to have a trade plan to understand how and why you get in and out of trades and what kind of trader you're going to be. You need to be journaling and tracking what you do, because you can't manage what you don't measure. You can't replicate a winning trade if you don't know what you did in the first place. You can't eliminate losing trades if you don't know how they happened. And last but not least is you need to have a strategy that works really well. When you're looking at your strategy, here's things you need to have. So one is you need to have a confirmation checklist. You need to know, why am I getting in this trade and why am I getting out of this trade? And is the trade doing what I thought it was going to do? So you need to have a strategy that has a confirmation checklist. That might be, maybe it's a moving average crossover. Maybe that price needs to be above a 50 moving average. Maybe that you need to be in a trending market. There's a lot of different things we need to have. Maybe you need to have a candlestick entry. There's things that you need to have there that I'm going to let you figure out in a different video. I've got plenty of strategy videos on my channel to go check them out. Here's what I teach my students all the time. Remember being in school and they used to tell you something called Pemdas or Pemdas, right? I don't even know if they teach this anymore. You Common Core kids might not know what I'm talking about. But what I'm saying is, we used to call it, please excuse my dear Aunt Sally, okay? And what that was parentheses, exponents, multiplication, division, addition, subtraction. And that's how you do math. You can't do subtraction before you do multiplication, right? So what I mean by that is, if you have an algebraic problem and it says something like 10 minus 2 times 8 equals, what we would end up saying, you say, man, I did not come here to learn math. Well, check this out. If we did it this way, 10 minus 2, right? If we did 10 minus 2, that would be 8, times 8 would equal 64. That's wrong. 10 minus 2 times 8 is not 64. Now, if we did the right way, the multiplication comes before the subtraction. So 2 times 8 would be 16. 10 minus 16 is negative 6. That's right. That's accurate. Why do we get such a completely different number? Because we did it in order and not out of order, okay? In Forex, it's the same way. There's certain things that have to come first before you come and do something else. Most people teach indicator strategies as the first thing to look at. When this moving average crosses over this moving average, do this. That's cool, but that can't be based on everything, because you're going to get faked out all the time, okay? So what do we actually do? In Forex, our Pemdas, or Pemdas, however you say that, is this. Price action, market structure, chart patterns, candlestick patterns, divergence, and indicators. That is how we should be trading. You look at indicators before looking at price action, you're going to get faked out. Because what's going to happen is you're going to have price action telling you it's a sell, but an indicator going up, that is actually divergence, which you didn't check. So you think it's a buy, it goes down, and you lose the trade. Had you done it in order, you would have seen that price action said go down. It was doing it at a level of market structure. Maybe there was a chart pattern there. A candlestick told you to sell. You saw divergence in the market. So everything here told you to sell. But you didn't look, you looked at an indicator first. And so because you didn't do it in order, you got faked out. This is how we should be trading the market. Price action is king. Market structure second. Chart patterns third. Candlestick patterns fourth. Divergence fifth. And indicator entry last as a confirmation. That's how you should be trading Forex if you're going to be successful. So guys, that's how we're going to make money in Forex. We got to have the mindset down. We got to have the trading strategy. We got to have the journaling. We got to have all that stuff there. Risk management. You've seen, these things should be in order. I want you right now to sit down and focus on getting all those things in line before watching another strategy video. I want you to sit down and focus on getting the right mindset. Why are you trading in the first place? That's going to be the most important thing. If you know your why, nothing will ever make you stop. If you lose a trade, guess what? If you're not trading for your why, every loss is going to have you chasing a new thing. There's a reason why you've done this and that and this and that and all these different things that haven't been successful, is because you haven't tapped into your why. If you tap into your why, you can't make somebody quit who's trading for a purpose. Okay? So get your why down, get your mindset down, get your journaling down, get all that stuff down. Then focus on strategy, because that's going to help you a lot. Okay? Secondly, I want you to sit down and I want you to start figuring out, what exactly does my trade plan look like? Get a strategy in place, get risk management in place, get your confirmation checklist. In other words, if I have 5 things on my checklist and only 3 things happen, I'm not taking the trade, I'm just passing. It's okay if I don't trade tonight. It's okay if I miss out tonight. It's okay if I don't trade, because it didn't fit the requirements of my trade plan. I'd rather you miss out on something that could potentially win than try to force something that is almost assuredly going to lose. Okay? So have that in place. Journal. And you can get my journal. Check out the link below, tradinggetpaid.com. Go and get my journal, because I made that for you. That's my trade plan. That's how I trade. It's how I track my trades for you. Okay? Do that. And then I want you to focus on this. I want you to sit down and look at charts and understand each one of these things in order. Before you start looking at indicators, I want you to make sure you understand price action. Go watch price action videos. Stop looking at strategy videos that are based on indicators and start looking at price action and market structure videos. Because if you can understand this stuff will come a lot easier to you. Okay? Don't worry about a divergence strategy. Because if you don't even understand price action, how are you going to recognize proper divergence versus hidden divergence? Ooh, I just blew your mind. You didn't even know hidden divergence was a thing. You better quit. Price action, market structure, chart patterns, candlestick patterns, divergence, and indicators. That's how we trade Forex successfully. I hope this beginner class helped you. I'll see you in the next one.